these goals that you've set to surpass $130 billion in new capital by 2024, 3 years from now, you're already set to exceed those goals. Your stock has risen about 80% on the year. How do you start to move the needle from here?
Well, Shonali, first of all, thanks for having me. And yes, it was a terrific quarter, record results. But I think it really speaks to the fact that we're ahead of expectations on our strategic plan. We announced our plans early this year, and it's all about, if I could sum it up, being the best investment firm we can be to drive performance at global scale and to manage ourselves better than we've ever operated before. And I'm challenging our people to think bigger, move faster, perform better, and they're executing.
So
if I could point out three highlights really quickly. First of all, the investment performance has been terrific, and that's driven strong realizations. But second, the activity levels have been incredibly strong across all three of our businesses: private equity, global credit, global investment solutions. And then finally, our ability to keep that momentum going with our fundraising has been exceptionally strong, and we're really pleased.
So Q, this should give you some leverage here to be able to make some investments into the further growth of Carlyle, as really you have transformed it quite a bit since you became the sole CEO just over a year ago. Where can you start hiring and making Carlyle bigger in some areas?
Sure. Look, it's all about pivoting, adapting, evolving. We've got a terrific platform. We've really been investing in our global credit business recently, and you see the results of that. This quarter, it's $66 billion of AUM. It's grown more than 2 times in just a little bit under 4 years. We've got big plans for Fortitude, our insurance solutions business. We're great plans set aside for infrastructure. So look, in addition to the organic growth, what we're going to do is, with our fortified balance sheet, really make investments to strategically think about how do we expand our platform to drive growth, to build new levels of sustainable FRE moving forward.
Interesting. So inorganic and organic growth. Talk to us about the asset sales environment. We were just hearing how much you managed to divest or to be selling. And this is a great time to sell when you have valuations at record highs, not only for your stock, but the S&P 500, for the NASDAQ 100. Are you worried about the environment, the growth environment? Is it always going to remain a good time to sell for the next year, Q?
Well, surely asset prices right now, valuations are high across the board, no matter where you look. Markets are robust, and we've taken advantage of that. But really, realization activity and the distributions that we've had are a result of the hard work over the years of making great investments. And, a big credit to our investment teams that have gone out, found great companies to partner with, executing against their business plans. And it's about the value add that we're putting to these companies, bringing to these companies in terms of growing their top line with digital capabilities, in terms of driving real operational changes and improving supply chain. It's about our ESG capabilities and how we're making each of these companies better. And when you have that type of a mindset, you can drive investment performance, and that leads to the realization activity that we're seeing. And clearly, the favorable markets help. But I'm very comfortable in the fact that we've got record accrued carry balances because of the construction of our portfolio, which is going to drive realization activity for years to come.
Are you seeing better market opportunities with rising rates globally?
Well, look, unclear whether rates are going to rise sustainably over the longer term, right? I'm more of a believer that after a period of time, you're probably going to be in a lower yield environment for longer than people think. But really, the trend I would put my finger on is that there's just tremendous change happening around the world, especially in digital. And I think COVID has taught all of us, great CEOs, that you have to adapt, evolve, and embrace digital to create opportunities. And that opportunity set is expanding because of all the changes that we're seeing around the world. And that's really what's fueling a lot of the investment pace here at Carlyle. It's more than doubled in just the past year. And it's not only buyouts, but it's growth investing. And it's using our platform to pivot in different regions, different strategies, because of all the changes that we're seeing in the environment around us.
Q, few people realize this about Carlyle, that you actually, at your portfolio companies, employ more people than most of your peers, about 1 million people across the world, correct? So what does this mean in terms of wages? We just saw Starbucks raise their minimum wage into next year into $17, up from $14 per hour. Do you see that same wage acceleration over at your portfolio companies?
Yeah, so we have close to 300 portfolio companies around the world. And I think what you're seeing in wages is one aspect of some of the pricing pressures and the inflation that we're seeing that's a little bit more persistent than maybe people thought. But it's not just wages, it's energy prices, it's shipping costs. All of this obviously because our supply chains have been discombobulated, and it's now trying to react to a surge in aggregate demand. No doubt this is more persistent than all of us thought, but we're in the long-term business, and we look at things over a long period of time. And with that perspective in mind, I do think some of the price pressures that we're seeing, including the wages that you've talked about, Shanelli, are more temporary than not. And I do see these types of issues as creating more opportunity for investments across our broader platform if you have a long-term orientation.
Q, I want to get your thoughts on Washington. Starbucks was a private sector response to a problem, and now we are having a lot of disputes in Washington over the right tax rate and the right amount of spending. Where do you think the balance should be at the end of the day? Do you have numbers in mind if you had to kind of give Washington a clue into tomorrow?
Well, look, it's evolving day to day. It's so hard to comment on these things when things are changing literally day to day and hour to hour. Taking a step back, though, look, we've been around for over 30 years. Our teams are monitoring what's happening in D.C. very carefully, and I'm quite comfortable that we're going to navigate through all these issues. And yes, it's a complex environment, but the point I want to keep making is these types of changes bring about opportunity. And if you've got the right platform that's able to adapt and pivot, I kind of see Carlyle navigating through this environment quite well moving forward.
As a global company as well, Q, and therefore, does the U.S. look as an appetizing investment case as the rest of the world right now? Are there more opportunities abroad as you do see such changes here in the U.S.?
Well, no doubt, the creative, destructive aspect of our economy really showed itself over the past couple of years. Our companies are resilient. We've got great management teams. The amount of technology that's embedded now across all sectors, and how management teams have really embraced that to grow and drive opportunity. It's been really a great thing for this country. It's a strength of our country, as are our markets. And we continue to see great opportunities here in this region of the world. But I'd be remiss if I didn't state that other parts of the world and the economies and how they're transitioning are also equally exciting. So I'm very optimistic about the opportunity set for private markets moving forward.
How much are you paying up for young talent?
Clearly, it's a time when everyone's after great young talent. At Carlyle, we have a special culture. And we've always been able to attract the right type of folks who fit in and who take a long view, who are very partner-like in orientation. And, we have a new mindset here. We're really driving for the future, and it's really attractive to a lot of the young talent. And no doubt we need to compete to earn the right to have them work here. But I'm quite comfortable with our ability to attract that talent for the longer term.